Welcome to Investors Insights, episode number 129. Today we will be discussing earnings, corporate earnings, and how they'll impact your portfolio, or could. Or will it be related to oil prices in Saudi Arabia? Will it also involve China? The topics are far and wide, and we want to stay on top of it. And also, if you like what we say, then let us know. We love the emails, we love the phone calls. If you don't like what we say, we want to hear about that too. We love the debate, we love the discussion, and most of all, we want to know you have an opinion. So let's get started.
I'm Greg Powell, and this is Investors Insights.
You're listening to Investors Insights with President and CEO Greg Powell and the Portfolio Strategy Team at Five Plan Partners. 3, 2.
Guys, this year is the year of topics. We have not run out of topics to discuss in relation to portfolios and the world. So on that note, now Trey, early this morning when we met, you were pounding on the table in terms of corporate earnings. So without pounding on the table, could you please relay that a little bit more?
Keep my fist to myself for our viewers. So this morning we went over the earnings so far this year. We're hitting a dead spot in terms of a lot of economic data, and what's going to drive the markets, we feel like, through the rest of the year is going to be earnings. And so what's happened so far, 59 companies have reported S&P 500. And of those 59 companies, 64% have beaten estimates. That's below the average of 66%. But 59 is not really much of a sample size.
Yeah.
Between now and the end of next week, there will be 278 companies reporting. So really we're in the meat of earnings season right now. And what we'll be watching for those watching in terms of how does that impact my portfolio is if they beat, how much they beat, because these are lowered expectations.
Right.
So they could beat and we still have negative earnings growth. That's not great. And then also, if they're not beating, are they just dumping all the bad news for future quarters on one quarter? Once things become bad.
You mean they do that, Trey?
Every now and then they'll take when bad news is prevalent, they'll say, us too, and just dump everything on one quarter, which could impact the mood of the market's sentiment and could hit us in a negative direction.
Okay. All right. Well, and from your standpoint, you're talking about earnings and corporations making money. Ashley, the issue you had this morning was in regards to debt ceiling.
Yes, indeed.
So a whole nother way of looking at revenues.
Right.
So talk a little bit about that.
Happy to, Greg. You'll see a lot coming up in the popular press about the debt ceiling debate, and whether you're on the Republican or Democratic side, either way, what you're going to hear about a lot of talk about the deficit going down.
Right.
And that will be touted a good bit in that argument. The truth of the matter is it's not nearly as good as it seems. First of all, we only went down in deficit reduction about $48 billion. That is statistically insignificant, number one. Secondly, our debt to GDP is still at 73%. But the thing that we find the most disturbing is that you're getting a pronounced shift in the deficit now, more towards just what we call gap filler, like Medicaid, Social Security, entitlement. And it is taking away from items like R&D and healthcare that the government can spend.
Military.
And military too.
Is another one.
That gives you, it gives you a lot of positive multiplier.
Right.
If the government buys a tank or if they pay for NIH research, that's a good multiplier. That's getting a good shift away from that. So you're going to see a lot more information touting that it's really good. It's not.
Okay. All right. Good points there. All right, Bobby, internationally, Europe, Asia, or specifically China. Talk about that because you've really been concerned about what's been going on in China, and I appreciate the research you've done. So talk about that.
Yeah, so obviously a lot of the volatility this year in the market has been caused by a global slowdown, more specifically China. Well, over the weekend, China reported their GDP. Their GDP came in at 6.9%. And so they actually beat expectations. Expectations were 6.8%, but it was the first time that the Chinese have reported their GDP below 7% since 2009. And so the question is, what happens next? Do the Chinese look at this and, continue to have more stimulus, more monetary fiscal policy stimuluses?
Right.
And do they continue to devalue their currency? And so that would put some pricing pressure on world trade. And so, now that
So
it's
in
proven,
saying that countries then they're dependent on their exporting,
Right,
then
correct.
they would be impacted substantially, correct?
correct.
Yeah.
And so what happens next? And so it's confirmed that China is in a slowdown,
Right.
and so we'll see what happens.
Right. And then another topic is just on energy. We're going to have major conversations coming up. OPEC's got a meeting in December is when that's supposed to happen. There's talk of, do we cut production? Do we continue production? There's also debate within this country in terms of our energy policies and what we're doing. So that's going to be another topic that could not only impact the markets, but also commodities as well. Agreed on that?
Oh, yeah.
The export ban is a top topic right now.
It is, yeah. So those are items that we're looking at, topics that we think you need to be aware of as well. We want to bring news to you long before you hear it anywhere else. We're trying to let you know all the issues that are out there. We still are in a conservative position, I think, at this point in time, just because we want to see what these corporate earnings do. They start coming in bad. Last time we checked, earnings determine the price of a stock. Is that valid?
Yeah, that's right.
And if earnings are down, that means we may see a market trade back. So we're gradually moving towards earnings season and checking off as they announce. So on that note, we appreciate you taking time to watch. We also appreciate all of you that have been forwarding this to friends, business colleagues, and family, people you associate with. And we also treasure you as clients. And those of you that are watching that aren't clients, if you're not having these conversations with your current advisor, we'd like to have the opportunity to talk to you about that. Thanks again, and look forward to keeping you updated.
More information at fiplanpartners.com. Securities offered through LPL Financial, member FINRA, SIPC.